weeks to go for Nirmala Sitharaman's maiden budget as Finance Minister. Pre-budget consultations are on. The Finance Minister today met representatives of the financial sector, including NBFCs. The cash-strapped sector asked the FM to treat them as a priority. They've asked for a permanent refinance window and have also lamented, saying that it's unfortunate that a dismal picture has been painted of the entire sector because of a few defaults. So what can the Finance Minister do for the NBFC sector? To speak more on this, I'm joined now by Raman Agarwal, Chairman of the Finance Industry Development Council, who was also at that meet today. I'm also speaking with Maiden, a consulting editor, ET Now. Welcome to both of you. Mr. Agarwal, let me begin by asking you what that meeting went like and what were your key demands?
See, the most important aspect was that for the first time they had prescribed three major themes for discussion in today's pre-budget meeting, and one of the themes was the liquidity crisis for NBFCs and what steps should be done. So that itself was a clear indicator that the government and Ministry of Finance do recognize that there is a need for some measures to be taken to provide liquidity. Point number one. So from our perspective, few things which we clarified, as you said in your opening remarks, that the defaults which have happened or one or two cases which have happened are all long-term financing players. And if you look at their number, their number would be below 10 out of the entire gamut of 10,000 odd NBFCs. Secondly, housing finance companies are a different ball game, again a long-term financing player, and have a different regulator in National Housing Bank. So to say that these companies represent the picture of the NBFC sector is incorrect and quite far-stretched. A typical NBFC model is a short-term, small ticket size lending model which is 2 to 5 years. So we need to first of all appreciate that these are different one-off incidents and they don't represent the entire sector. That's the key point.
Do you think that the sector has got a bad rap unnecessarily, Mr. Agarwal? Because it's being described as shadow banking. The perception is that not everything that occurred within certain companies was above board. And what really do you think that the Finance Minister can do to change that perception?
So, see, basically, first of all, let me also clarify one thing, that this phrase of shadow bank has now been officially dropped by Reserve Bank of India and also World Bank, because they realize that the NBFCs, the way they are regulated in India, it is not correct to call us as shadow banks. So that's one point. Now, as you asked what the Finance Minister can do, the point is there has been a sudden drop in the confidence level because banks, who continue to be one of the major source of financing for NBFCs, have suddenly their confidence seems to have shaken up. That needs to be addressed by way of a temporary dedicated liquidity window for NBFCs through the banking channel, and there are also ways to incentivize banks to lend to the NBFCs. So that is what we've sought. So we've sought a dedicated liquidity window as was done in 2008 and 2013, and we have also requested if all bank lending to NBFCs for onward lending to priority sector could be treated as PSL for banks. This was an arrangement which was working since 1999 till 2011, and in 2011 it was abruptly withdrawn. That needs to be restored, which will give an incentive for banks to lend to NBFCs.
Okay, Maithili, let me get you into the debate. What is expected from this, maiden budget from Nirmala Sitharaman with regards to NBFCs? Obviously, it's an issue that no government can ignore. But is there scope really in the budget to do much?
Absolutely none. The budget has nothing to do with NBFCs. The issue of NBFCs is squarely within the domain of the Reserve Bank of India. Liquidity is a technical issue. If the Reserve Bank of India finds there is a liquidity scarcity in the system as a whole, then the Reserve Bank will and has been intervening. The problem with NBFCs is entirely of sins of commission. I repeat, sins of commission, not only omission. not just omission. They were excessively leveraged, and now what we need to see is a shakeout. There are better run NBFCs even in the housing finance area, HDFC being a classic example. So, if there are some NBFCs which have over leveraged, borrowed more than they should, taken short term liabilities to fund long term assets, then it is only fair that they should suffer the consequences of that. It is very important for us not to lose a distinction between banks and non-banks. Banks are licensed by the Reserve Bank of India, they are closely regulated, closely supervised. NBFCs are not licensed by the Reserve Bank of India, they are only registered entities. So, if they are to suffer the consequences of their actions, excessive risk taking, it is only fair that the promoters, the investors suffer the consequences, and it would be very unfair to expect banks to pick up the tab. Remember, today the problem with NBFCs is because banks just did not have enough capital to lend. So, if we recapitalize banks, stop the witch hunting of bankers, then automatically you will see bankers stepping into the breach again, and bank lending to these sectors that NBFCs are talking about will again pick up. So, there is absolutely no case for one size fit all solution for all NBFCs. We need to have a shakeout, and the shakeout is a necessary pain that the economy must suffer, otherwise we will have much greater pain long term.
Okay, so let me come to the couple of things that they have asked for, Maithili. One is of course a liquidity window, the other is for a permanent refinance window. Do you think these are feasible demands?
No, not only are they not feasible, they are very inadvisable, because the better run NBFCs are still able to raise funds, maybe at a slightly higher cost. When sentiment turns against a particular sector, yes, they will have to pay for the sins, the entire sector will have to pay for the sins of a few, but that is the way the market system works. So, no case whatsoever for any kind of general refinance window. What can be done, that the better NBFCs which have good assets, they should be able to securitize those assets and should be able to find takers. As in the case of DHFL, we have seen where promoters are willing to cede control, where they are willing to sell their stake, then there are ways out. Today promoters want to be bailed out, and there is absolutely no reason why that should be done.
Mr. Agarwal, would you like to respond to some of the analysis Maithili has provided there?
Yes. So, first of all, I think I would actually differ from the whole idea that the NBFCs are merely registered and lightly regulated entities. Let me draw your attention to the 2014 revised regulatory framework issued by RBI based on the recommendations of the Usha Thorat committee report. The entire objective of that circular and the revised framework was to quote harmonize the regulation of NBFCs with banks and other financial institutions, and the asset side of our balance sheet in terms of NPA recognition, in terms of provisioning norms, in terms of leveraging and capital adequacy have been in fact brought at par, or in some cases even better than banks. If for example, if you look at the capital adequacy ratio today, it is prescribed at 15% for NBFCs, where banks it continues to be 9 to 12%. Secondly, the NPA norms have been brought at par. That's first point. Secondly, yes, I agree, there is no case and nobody asking for any relief for the people who have done wrong. As I said in my statement, that one or two companies who have suffered for reasons which could be poor governance, which could even be some circumstantial issues, there is no case for that. But what I am saying is, to have that contagion effect and paint the entire sector is absolutely incorrect. And if the issue is not merely providing funds to the NBFC sector, you see the direct impact of the credit flow being affected in the segments like MSMEs and automobile. Let me also inform you that the Society of Indian Automobile Manufacturers have very recently requested, and we had a joint meeting with NBFCs to ensure and understand that credit needs to flow to the automobile sector, because there is a crunch available prevailing in the market.
No, there is no doubt. There is no doubt.
What we are asking is for not a permanent.
Yeah, there is no doubt that the credit squeeze has impacted various sectors. I have to wrap this quickly, but Maithili, I'll give you the last word. A balance needs to be struck here. I know you're talking about a shakeout. I guess the government will have to see what the collateral damage will be to other sectors as well.
Well, I think, Tamanna, growth should never be at the cost of prudence, because if it is, then we are setting up for us up for a much bigger fall later. It is very important that the government and the RBI sit together and do not panic. A shakeout is necessary, there will be short term pain, but there will be a much greater long term gain. Otherwise, what we are doing is creating a huge moral hazard, because what Mr. Agarwal says is correct in some sense. There is now greater harmonization of regulations between banks and NBFCs, but they are nowhere at par. As I repeat, banks are licensed entities. RBI gives a license only when it is clear that the promoter is a fit and proper entity. There is no such scrutiny in the case of NBFCs. So, it is very important that even as we allow the shakeout to happen, it should be an orderly unwinding. I repeat, the unwinding should be orderly. So, the RBI should take care to see that the contagion effect is minimized, and this can be done if public sector banks are speedily recapitalized and the present witch hunt that we have of those bankers end. Then we will have an orderly deleveraging of the sector, which does need to know that if you are over leveraged, you will have to pay for the consequences.
Absolutely. We've unfortunately run out of time, but we will definitely revisit the state of NBFCs in much more detail ahead on the India development debate. I want to thank you, Maithili, and of course Mr. Agarwal for joining us today.